All right, hello everyone, good morning.
Good morning.
It's good to see everybody. This is a fun group. We're here for a session on talking about AI in financial services, how to think about that through the lens of financial health. This is Emerge after all. The real questions we're trying to answer in this session are, will AI transform Americans' financial lives, or will it incrementally improve efficiency in financial institutions? And what can we do now to maximize the outcomes for consumers? I'm Asad Ramzanali. I'm the Director of AI and Tech Policy at the Vanderbilt Policy Accelerator, which is a think tank at the university. I have worked in policy domains at the White House and for members of Congress, but the most important part of my resume is that I was once at Financial Health Network. So I'm proud to be back. I want this panel to focus on the two sides of the coin. There's real promise in what AI can do. That shows up as reducing paperwork, making back-end systems more efficient, personalizing advice. There's a lot of ways this can show up, making credit underwriting more efficient. But there's also all the risks that we've all read about. There's the bias, new privacy risks, cybersecurity issues, the list goes on. So we're trying to have a clear-eyed discussion about both sides of that. But let's jump in with intros. Because time is limited, let's keep it to a tweet-length intro of who you are and what you do.
Great. Hi. Do I go first?
You're first.
It's great to be here. It's great to be back. I, too, am an alum of what was CFSI.
What was CFSI?
So early days when Jen was really thinking hard about how we leverage financial services, not just to make sure that people are a part of the financial system, but actually that they're having the outcomes. So kudos again to Jen and the team for really moving the needle tremendously. I've been in and out of US government, the Treasury Department, and I lead a DC-based nonprofit research org, FinRegLab. And our mission is to really interrogate the data and technology possibilities so that they are bringing to bear financial opportunity, financial inclusion for people in small businesses, especially people who have historically been left out. So it's great to be here.
Great. My name is Ted Leung. I'm the Chief Technology Officer at Prosperous.ai. Prosperous.ai is a public benefit corporation that is building an conversational AI coach that is aimed at the 160 million plus Americans who live paycheck to paycheck. And the reason that I put all of that stuff into the intro is that we don't believe that technology is sufficient to solve the problems that we have with finance. There's a governance aspect, which is why we're a public benefit corporation. And we believe that generic AI technology is not aimed at the population that we're all here and interested in. And so we feel that there's got to be a focus and specific design for people who are in that category.
And I'm Jay Budzik. I look after AI and machine learning initiatives at Fifth Third Bank. We're a top 10 bank based in Ohio. Just this morning, we launched a new credit model that looks at cash flow data and credit data in combination with machine learning algorithms to give greater access to credit, about a 20% increase in inclusion for people who had limited credit data as a result of launching that model. So the impacts of AI on people's lives in financial services are real, and we can apply the technologies responsibly at scale and impact people's lives. So super excited to be here and to talk about the work that we're doing and some of these emerging technologies.
So let's jump in, Jay, right where you left off. What across everything you're working on that you're seeing today that's live, but also things that you can reasonably foresee in the near term, not the 20-year promise, but in the near term. What's the most exciting for you that might actually improve consumers' outcomes in a meaningful way?
Look, I think the work that we're doing in credit to make access to auto loans, credit cards, home equity products more accessible and fair and transparent is important because it's going to allow people to access products that they were previously locked out of by virtue of us not being able to consider all the data about them. Most credit scores are based on a handful of data points that don't include things like your rental payment history or your income or your spending patterns. By pulling that data in, we're able to consider more aspects of a person's financial wellness overall and incorporate that into decisions about access. So that's, I think, a really
Are you seeing that that's working? Is it actually expanding?
Absolutely. People repay at higher rates. We're able to identify populations that have been excluded and really kind of move the needle on the business by doing good for more people. But beyond, and that's kind of a theme across a lot of the AI initiatives. If you think about when people interact with us at a branch, if we tried to serve everyone in the community all at once, we'd have to have really big branches, where the lines would be really long, like right around, around the corner. So AI offers us the ability to serve many more people at scale with the expertise that our branch bakers have, without causing people to have to wait in lines. We can offer that advice 24/7, and our digital assistants that are live on the website today can answer basic questions about how to order checkbook or how to open a product, but the opportunity is to go way beyond that, and so that's super exciting.
So Ted, you guys are doing something different. You're not in the credit underwriting business. You've got a whole different business. How does AI that can actually improve consumers' lives show up in your world?
So I think for us, we're on the consumer side, right? And I think one of the things that consumers need is they need an advocate. They need trusted sources of information. They need advice that they feel that they can trust. And looking back to some of what Jennifer said yesterday, people's lives, financial lives, are only getting more complicated. There's more products, there's more artifacts that are being left behind by people changing jobs or the nature of work. Something has to bring all that information together in a coherent way for people, to help people make sense out of all this complexity. And the complexity that was already there, right? You've got all this complexity around what's the right way for me to budget? What do these financial terms mean? There's a lot of information that is out there that there's no good single point for people to come deal with that and have somebody walk them through that.
So let me be critical for a second. 15 years ago, Mint.com had a similar promise, right? What's new?
So yes, I think that's true. And if you look at what Mint.com and all of its compatriots are, is they suck in your financial data, they draw you some charts, some tables. Now, if you know what to do when you're looking at those charts and tables, then you are in great shape. But if you grew up not talking about money around your dining table, if you grew up a variety of circumstances, those artifacts that Mint presents you with help you not at all. And so that's the barrier that we're trying to get over next, and the ability to converse with the system that knows all that information and a bunch of other information is the thing that we think is now, this technology gives us a chance to crack some of those problems, right? It also gives us a chance to deal with people's emotional state, right? We know that, and I've heard in many of the talks that I've been here today, it's not just the numbers that make people's personal finances hard. It's their mental state, their emotional state, because they're under pressure, they're overwhelmed. And we have seen in the current generation of LLM-based technology, that technology can recognize what people are experiencing. We can argue about whether they really understand it as emotion or not, but you can recognize that. And when you can recognize that, you can use that to guide the conversation to say, hey, let's slow down. You seem stressed. Let's slow down. Let's break this down into simpler steps for you as we're explaining a thing that we're working through.
You can gauge the vibes a little bit better.
Absolutely.
Great.
Because there are no vibes when you're clicking Mint and opening up your pie charts, right?
Yeah, it was kind of surprising to me. We launched an agent to call people when they were late on paying a car loan. And we know that when we can reach people and remind them to make those payments, that we can avoid collections, getting them in trouble at the credit bureau, all the sort of downstream negative things that happen with late payments and delinquencies. And we were worried that people wouldn't want to talk to an AI about anything related to their finances, frankly. But But it turns out after, when we surveyed them, that people said, hey, it was a lot less stressful for me having to talk to this AI than to admit that I had a problem to a real person. So you're absolutely right. There's a huge opportunity to help people through difficult situations that they might not approach a human about because they're too embarrassed or too emotionally charged.
Melissa, you guys have done research on, especially on the credit underwriting stuff, you guys have done really interesting research that looks at what's the effect of all of these kinds of tools, right? Tell us about what you guys have been looking at and what you're learning.
Sure. So I'll jump on both the efficiency point and more the sort of what does this mean for consumer side. And I think both are important for our objectives around making sure that people are getting access to responsible financial products and services. That's on the benefits of certain forms of AI that we have interrogated, machine learning, supervised machine learning, and its use in credit underwriting models and decisions. We've done research that shows both there is significant lift, the ability to understand, is somebody going to repay or not, by using machine learning. That's a form of artificial intelligence. That, though, is also very dependent on the data that the models are trained on and making sure that the data are actually representative of the population that we care about and that the provider is trying to serve. So cash flow data, you've heard this mentioned, is a data that is much more representative of lower income households, small businesses. And so it is important on even sort of the efficiency and the benefit, how the financial sector is using certain forms of AI, that there is good data that those models are trained on. Similarly, when we think about using non-deterministic models, this is the ChatGPTs of the world or the Claudes, we think that there is tremendous value for many of the points that Ted was just making, the dynamism that really can be brought to bear in giving people direction, giving people insight, being very responsive and timely to the immediate questions that they're dealing with. And then we think there's also potential, and this is, work for all of us to do and figure out together and test, but around helping people plan for the longer term and execute in the end using agentic capabilities. But there's a lot that we have to get right, both from the alignment of the models themselves, making sure that they are aligned with that human and what their objectives are, the business models, who's providing the models in the first place. But I want to be somewhat provocative here. It does also mean making sure that the data that is representative of the people who those models are being trained for actually reflects people. And that data questions are really tricky and a really hard one, and it raises questions around privacy and data access. But getting this right does require that the data are part of that build and deployment of the AI tools and technologies.
So let's build on that. You framed it as an opportunity of this is how we, here's where we have to go.
Yeah.
The opposite side is some of these things may get resolved. We might get better data. We might get better data pipes. Some may not. And so when you think about the broad spectrum of risks from bias, amplifying, or even being harder to catch, new privacy issues, cyber, the whole kind of panoply of AI is introducing a new set of risks or exacerbating existing ones. Which are ones that to you feel like they're hardest to solve? There are ones where we kind of know the solution, and there's ones that feel harder to see the future.
I think, pulling way up, because there's a lot of anxiety about AI, and there's a lot of sectors and there's a lot of territory where we do not have laws and regulations that stipulate things like explainability or fairness or fair lending. Like, I get a lot of the sort of existential questions. Where's the data center being placed? Those are outside the scope of this conversation. But in financial services, I think we have a real advantage because we do have laws that require, especially in certain high-risk use cases, that there is an interrogation of, can you generate an explanation when the model is being used in a credit decision, for instance? I think we're going to be pushing ourselves to make sure that when we're using non-deterministic models, that they are resulting in optimized outcomes for the human on the other side, both because we have laws that we can look at and learn from, but also because if you're providing these kinds of services, you're going to want to make sure that what you're delivering is responsive to the humans. Whether you're a back-end model provider and partnering with a bank or a fintech, or you're a fintech building it yourself. I think the thing that I'm hopeful we're going to get to is I'm not a technician, but I do appreciate the opacity of these models and the complexity. Are we going to be able to really sufficiently utilize them and have enough confidence that the model is deriving the ultimate benefit for that individual?
And you're right to say there's
really at the model level. I
laws
think we're going to solve the business case kinds of questions, how that's optimized for. But I think the model itself, there's work still to do that Anthropic, for instance, is really leaning in on techniques around how do we sort of make sure that the models aren't hallucinating, that they're not manipulating for a different objective. I don't want to get lost on that, but
and Jay, why don't you jump in, because you guys you launched a product today that is going to have those questions.
Yeah, I mean, I think to a certain extent, it almost requires us shifting our thinking from in the early days of models in banking, credit models, for example, you could write down the equation that determined the score. And there was a lot of comfort in being able to do that because you could say—
a lot of confidence in the coefficient.
Yeah, and a lot of confidence, right. But to a certain extent, I almost feel like that's missing the forest for the trees, because just because you can understand how the score comes together doesn't mean that its effects are positive for the people that it's impacting. And so I think there was kind of a ton of focus put on the mechanism for how these scores were made and the mechanism for how the data was prepared for the scores, and maybe less focus on outcomes than warranted. And so with these large language models, it becomes very, very complicated to really understand how all the parameters and the billions of parameters in the model, you can't write the equation down to say, okay, I really understand how that's working. But what you can do is you can do focused testing. You can roll out gradually. You can ask people what their experiences are. You can monitor with humans overseeing. We used to listen to every call that our AI made to make sure that it wasn't messing up. And then incrementally improve. So I think it might require a shift of focus from the internal workings and the mechanisms of these models to things like measuring their impact on something like financial health.
Will that require a shift in laws or regulations?
I mean, I think we're already seeing some of that happen. The OCC and the Federal Reserve just released new guidance on model risk management that explicitly excluded generative AI from the scope of model risk management. So I'm signaling probably that there's more to come. Mm-hmm. And the guidance went from prescriptive to more principles-based so that we could apply a risk-oriented framework to how much scrutiny we give to models. Now, that means for underwriting, we still are doing all the same things that we did before. But for these other use cases where we're interacting with customers and helping them through an account opening process or a loan application, et cetera, we can rely more on outcomes testing than we might have been able to before.
Ted, I want to come back to you, but before we do, I want to turn to the audience for a second. We're going to talk a little bit about AI agents. Raise your hand if you've ever used an AI agent. So an AI system has done something on your behalf. Okay, how many of those are coding agents, like vibe coding of some kind? Okay, put your hands down. How many of you would be willing to give your credentials to your bank account to an AI agent? Okay. This is a real trust issue, right? And we saw this in a prior iteration of Plaid having to do logins for people for third-party access. We saw almost no hands on the second one. what does that mean for a startup that's going to be dependent on people trusting the system to potentially at some point get...
So I think there's a difference between advice and action.
Okay.
Right, and I think, and I'm glad to see that there were no hands, because I think that's exactly the right answer.
So the advice today is don't do that. Don't hand over your...
I would not do that. I would. Please don't do that. and if you do that and you lose all your money, I warned you. But here's the thing, right? And I saw a bunch of hands for coding agents. Like, coding agents are the state of the art of what agents can do today. And they are, to some people, frighteningly effective. You can sit down, you can write several paragraphs, the thing will go off for an hour and come back to you with a working program. It sounds super impressive, but many of the people that are doing that, in addition to the base model, they've erected a whole bunch of superstructure around that process to get it to work. And they will tell you, oh, and it got lost, so I had to tell it, I had to correct it, I had to give it all these extra instructions. It can be made to work, but that is not a thing for which we gave you a piece of financial advice and you said, okay, please go do it. And when you said go do it, you're guaranteed that the transaction that you asked to happen happened. Right?
But let's break that down for a second. So in one world, we have people turning over credentials to GitHub, to working code bases. Why are people comfortable with that versus you're not comfortable with handing over your bank account and your credit card, even though in some ways the code base for a company is
you
super
made it
vulnerable.
so easy for me by saying GitHub. The whole point of GitHub is when you make a mistake, you can go backwards in time.
Infinite undo.
No problem. You make that payment to your bank or you send that wire, that you cannot make that come back.
So there's a question of, and if you try to, who's on the hook, right? Like who's got the
Now maybe in some future version of the world we'll decide that all transactions on banks have a 24-hour cooling off period so that you could yank them back. But today that's not how it works.
Yeah.
And in today's world, believe
I'm
me.
a little more optimistic. I think there are lots of efforts afoot to figure out this liability issue because there's a lot of potential power and value and commerce in agentic AI. And the question is, who's going to be holding the bag?
Who's holding the bag?
When things go wrong. And I loved your point about outcomes, and I join you on that. And I will acknowledge, just to sort of rebut a little bit, at a point in time, we may be dependent on outcomes and benchmarking. I think we should still be pushing on, are there ways in the end we have more certainty around the models? And similarly, we're going to tiptoe our way into going from advice to the ability for store of value money to flow, and that's got real value and
it has real potential. It has real potential.
I mean,
one of the
simple example of that is like you have an app that wants to do budgeting. Like if you could do the equivalent of digital envelope system, which would require the ability to move money between things, that would be a huge improvement for people. Like in our testing with users, people are asking us, when can you go that next step?
Right.
So people, it's not that we don't see the value or that people don't see the value, it's just we've got to figure out the mechanism by which we get there so that people don't lose all their money.
There's an architecture of trust, right? There's a liability question, there's a does it work question, I need to see the value. Just this week, OpenAI announced a partnership with Plaid that builds on an acquisition of a fintech startup that they had. And that's a business. They're doing that acquisition because they see possible revenue upside. And I read it as one of the quotes that OpenAI had is, right now this is read-only access to financial accounts. And the right now was that's telling that that's an editable statement for the future. What do we have to do to get from here, where we are today, where nobody's raising their hand for sharing credentials, to a world in which we can get the upside, but feel the trust of a system that doesn't leave you hanging as a consumer?
Look, there's something about coding agents that's different from all of this, which is that when someone's using a coding agent, they're an expert engineer, usually. So they know how to review the outputs and to see whether or not it makes any sense. Is that going to work or not? When we're talking about using agents to give financial advice to the general consumer, we're talking about non-experts interacting with a model as an expert. And that, I think, creates enhanced risk because the end consumer doesn't necessarily have the ability to evaluate whether the model output is right. Right? If it recommends that you move all your funds into some security, was that good advice or not?
A bunch of crypto that somebody's got a bunch of stake in.
Right. Was that good advice or not? And so you can adopt compensating controls so that the user has to confirm that the transaction is the transaction indeed that they wanted. But what you can't really do is know whether the consumer is making an informed decision at that moment.
Yeah.
So I do think we're going to need guardrails around this type of stuff so that people aren't misled. Things like TILA, right, that require disclosures of conflicts, that require disclosures of the downstream risks from making a particular move before we really are able to adopt these things at scale and with trust.
So we're hitting up on time here. I want to end with a short.
Can I say one thing
Sure,
about
jump in.
that? I mean, there's a lot in the details that I think we're all interested to better understand, but it is important to observe that is a set of partnerships with a set of regulated financial institutions. There are banks and there are financial institutions that are a part of that OpenAI move to provide, to both take in financial information vis-a-vis the partners with the banks and others. So you're building in, one has to assume some level of legal and regulatory obligations around how that happens. And I think that's an encouraging step. Like, let's see how that works, where there is potentially these intermediaries who have that rationale as well as obligation.
It is certainly going to be interesting to see how it all plays out because there's a whole architecture of regulation that's assumed there. Okay, I want to close with, give us the one sentence of, as you're looking out to the future of what AI could do with all of the risks that are here, all of the liability and legal questions that need to get worked out, if you can get one stakeholder to do one thing to make the future a little better for consumers, what would you want?
I think the efforts around data portability were really good ones, allowing a more wholesome picture of...
Who do you want to do that? You want CFPB? You want Congress?
If we would act as an industry collectively to make it happen, I think we could do it without regulation. And there are good incentives with the advent of these AI tools to do it.
Okay.
Focus on outcomes. Like for us, if people can survive a $1,000 emergency this year and a $2,000 emergency next year from having used our product, that's success.
Who do you want focused on outcomes? Your users, your investors?
I think it's, for us, it's us representing outcomes to users, and it's for us, it's convincing investors that outcomes matter more than things like engagement metrics.
Okay. Melissa?
Yeah, I think engagement metrics matter too, but I think making sure that we don't lose, for a variety of reasons, the person or the small business with less income. I think this is one of the things that I do worry a bit about the ChatGPT announcement is there's a high cost right now to participate. And that means we may not be ultimately getting models that are responsive to lower income people's needs and circumstances.
And that high cost is the $20 a month you have to be on as a ChatGPT plan.
It's higher than that actually, but yes, that's the high cost. And to be pointed, and I like you're saying who needs to be attuned to this, it also means making sure that the consumer advocacy crowd is engaged in thinking about the possibilities and helping to think about how do we get the guardrails right. And that we're all not just thinking about the risks, but where are we trying to go? And that everybody is a part of that conversation.
It's a great way to end it. Thank you all.
Thank you.
Thanks, everybody.